Okay, imagine this. You've got a stock that's totally off the radar, and then boom, seemingly overnight it skyrockets. Well, that's exactly the story with Foxx Development Holdings, ticker FOXX. So in this explainer, we're going to dig in and try to figure out, is this a once-in-a-lifetime moonshot, or is it a giant red flag just waiting to be seen? All right, let's just jump right into the action. It all kicks off with one absolutely wild day that made everybody in the market stop and ask, wait, who is Fox? So get this. On a single Friday in November, the stock price just exploded. We're talking a staggering 77% jump. I mean, a move that big, that fast, that's the kind of thing that gets everyone's attention, and it definitely demands a closer look. So, of course, a move like that makes you wonder, what in the world is Foxx Development Holdings? And is there anything about its actual business that could justify a leap like that? Okay, so let's pull back the curtain. What is this company? What do they actually do? So what we've got here is a consumer electronics company that's in the whole Internet of Things space. They were founded back in 2017. They just recently went public through a merger. But the really key number on this slide, that market cap, only around $24 million. That makes it what we call a microcap stock. And it is so important we understand what microcap really means. These aren't your big, stable, household name companies. We're talking about very small companies, often with pretty limited public info. And that brings a very specific combo of super high risk and, yeah, potential for high reward. Okay, now this is where things get really interesting. Look at the share structure. The company has almost 7 million shares out there in total. But, and this is a big but, only about 1.3 million of them are actually easy to trade for the public. That's what we call the public float. When you have such a tiny supply of shares available, it doesn't take much buying pressure to send the price soaring. And that's a huge piece of the puzzle behind that 77% jump. So we know it's small, we know it's volatile, but is it actually a healthy business? For that, we've got to dig into the financials and see what the numbers are telling us. Wow, okay, on the surface, this looks amazing, right? Revenue just exploded from a little over $3 million in 2024 to almost $66 million in 2025. I mean, that is some serious eye-popping growth. It's the kind of thing investors dream about. But is there more to the story? Well, here's the catch, a really big one. Even with almost $66 million in sales, the company's gross profit margin is razor thin, just 7.2%. To put that in perspective, for every dollar of stuff they sell, they only keep about 7 cents, and that's before they've paid for rent, salaries, marketing, all the other stuff it takes to run a business. And this right here is a huge red flag. Just look at the balance sheet. The company's total liabilities, that's everything it owes, are bigger than its total assets, everything it owns. Basically, the company is in debt for more than it's worth. That is a really tough spot for any business to be in. And the warning signs just keep piling up. The company lost $9 million. It's burning through cash just to keep the lights on. And it has negative working capital. You know, that last one, it's kind of like looking at your bank account and realizing you have more bills due this month than you have cash to pay them. Not a good feeling. So you've got this totally conflicting story, right? On one hand, you have this incredible revenue growth. On the other, you have some really serious financial problems. So where on earth could a company like Fox go from here? Let's look at 3 possible ways this could play out. Let's break it down. First, you've got the bull case. This is the super optimistic view where the company pulls a rabbit out of a hat, figures out how to make money, and the stock goes to the moon. Then there's the base case, where, things kind of stay the same. It just remains a high-stakes speculative gamble. And then you have the bear case. This is where the music stops, the growth stalls, and the company finds itself in some real trouble. All right, we've looked at the hype, we've crunched the numbers, and we've explored the possible futures. So what's the bottom line? What's the final verdict on Fox? So really, it all comes down to this. If you were to invest in Fox, you're signing up for a serious roller coaster ride because of that low float. You'd be taking on a very real risk that the company might not be able to pay its bills. And you'd be betting that they can somehow, some way, figure out a path to actually making a profit, which just isn't clear at all right now. The source material we analyzed really nailed it with this one piece of advice. Watch from the sidelines unless you're comfortable with microcap risk. It's a great way to put it. For most people, this is probably more of a spectator sport than a game you actually want to play. And all of this leaves us with one final and I think really important question, one that every investor has to ask themselves, especially with a stock like this one. When you know all the risks and you see that glimmer of potential reward, where do you draw the line between a calculated investment and just a pure gamble? That's definitely something to think about.